we are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Good afternoon. Thanks for tuning in. You're watching Ask PQ on Bloomberg Quint. I'm Navneet Saluja D'Souza.
Hi Navneet, and I'm Alex Matthew. Thanks for joining in today. If you've got any questions on equity, this is the show for you. Send any stock-related queries to us on Twitter, Facebook and YouTube. And you can also call us on 022-4540-4141. Alternatively, you can mail us at askpq@bloombergquint.com. Just add the Ask PQ hashtag. Now, our two experts of the day, the ones who are going to help you get all the answers to your questions, are Vikas Jain of Reliance Securities and Senthil Manikandan of Newberry Capitals, who joins us in the studio. Thanks so much for joining us, Jain.
All right, but before we get to the individual queries in the show, here's a quick look as to what's happening with the markets today. Well, second straight day of lackluster trading. Nothing's happening much, though we're off the opening levels. We did have a gap down opening. Post that, we recovered within half an hour of trade. And right now, Nifty is still in the green. Remember, during this session, we did breach the 50-day moving average. And Nifty is finding it a little difficult to sustain around those levels. Let's see if we can close above the 50 DMA in today's session or not. But what's doing well, clearly today the day is for the IT companies. The Nifty IT index is your top sectoral gainer. Let's just pull up that one, up almost 2%, 2.7% as we speak. Remember, tomorrow is the day when Infosys comes out with its numbers. Couple of constituents, all the heavyweights in fact, and the large cap companies, HCL Technologies, TCS, call it Infosys, Tata Elxsi, most of them actually, if you even look at Hexaware or Mindtree, all of them have been trading in the green. What's not doing well are the oil marketing companies. For the second straight session, they've seen some sharper cuts. BPCL, IOC, HPCL, all three of them are top losers on Nifty. Let's just pull up the Nifty contributors list as well and tell you which are the stocks which are capping the move on the upside. Your heavyweight, ITC, also the other heavyweights like Reliance Industries and State Bank of India have been trading in the red. What's supporting clearly today, the day belongs to the IT pack, and also some bit of strength seen for ICICI Bank. That's a heavyweight with almost 5% weightage on Nifty, which has been trading in the green. Talking about Bank Nifty, now remember, Bank Nifty was down nearly 1% in the intraday session yesterday. It recovered toward the end. It closed with cuts of only 0.5%. Today was the same trend. It had a gap down opening. We recovered, slipped into, moved into red territory, but right now just about trading flattish. Let me remind our viewers, today is Thursday, so the Bank Nifty weekly options contracts will expire, on back of which you can expect some bit of volatility to come by. So watch out for that one, because the Bank Nifty futures have been trading at a discount for the third or the fourth trading session. The broader markets, nothing much happening there as well. If you could just pull up the broader markets, that's a Nifty mid-cap and the small-cap index, down almost 27 points for the mid-cap index. Pull up the advanced decline ratio. That's not been supporting the broader markets at all in the last few sessions. Advanced decline ratio today also is in favor of the decline, so not a great sign. Well, besides that, the IT pack, the OMC pack, metal stocks, which have been shining for the last two sessions. Finally, some cool off seen for Hindustan Zinc, Steel Authority, Vedanta. The Nifty Metals Index too has seen cuts of nearly 0.7% last when I checked. Gaining in trade today are stocks like Dish TV. After that news came about that one of the promoter entity has given an offer to buy almost 50 crore shares from the market at a price of 74 rupees, but the current price has actually surpassed that mark. Besides that, you've also got IFB Agro, Praxis Home Retail. I guess today is the second straight day when that's been locked in upper circuit, Alex.
All right, with that, let's take our first query. Abhishek Chavan writes into us on Twitter. He wants to invest in Tata Motors with a 5 to 10 year view. Abhishek wants to know if he can invest at the current level. Now, we've spoken a lot about this, Navneet, about the fact that so many analysts have a buy rating on the stock. About 70% or more than 70% of the analysts tracked by Bloomberg have a buy rating on the stock, and that's probably Senthil because of the kind of correction that it's had over the past 12 months. Also, so far this year, around 15-16% down. So do you think it's hit the bottom, and do you think this is the right time to invest? He has a long-term view, 5 to 10 years. What would you advise him to do?
So if you look at the last decade, JLR has been performing well, and because of that, Tata Motors shares are performing well. But if you look at the last, maybe in last 1 year to 6 months, there are a lot has happened in the JLR front. 100% of the profits came from JLR in the last 5 years. But now I think domestic operations have started kicking in. But on the other hand, JLR has went down because it started with Brexit. And then now the trade wars that is happening between China and US. And the latest news is like China is going to bring down its tariff on the US auto exports. So, but this is negative for JLR because JLR has a JV in China.
Correct.
So this is negative for it. But like you mentioned, I think because of the sharp drawdown in the stock, the valuations look reasonable. But the fundamentals on the domestic operations also reasonably good. But on the other hand, JLR is not performing well. And next 5 to 10 years, I think there is a lot of disruption coming in the automotive sector. And with respect to the JLR space itself, I think the electric vehicles is going to penetrate first into that high-end category. And JLR is present over there. So, and what we are expecting is that it's going to be a tough time for JLR. So I think you can look at Maruti Suzuki. Of course, it's not richly priced.
Even at current level?
It's expensive.
Yes, because if you look at the growth in the demand and their market share, last 3 to 4 years from 45-46%, now it's around 50% market share in the domestic passenger vehicles. And recently they are venturing into the LCV space also. LCV space, they have a tremendous catch up with Tata Motors or M&M. And with their distribution strength and brand, I think Maruti Suzuki is a better play compared to Tata Motors.
And speaking about electric, Navneet, Maruti Suzuki, when we spoke to the management in the Auto Expo, said that they were going to branch out into electric vehicles in 2020. Now, perhaps it might be a little late considering Mahindra has been in the game for so long, but there's that talk of the Suzuki joint venture to set up the battery
I don't
plant.
know if the EV space is going to be a game changer for these companies, at least for the near term. But as you know, Senthil highlighted, the valuations do appear to be expensive, but let's also look at the other companies which have been doing well with high valuations. HUL, Jubilant Foodwork, all of them, Titan for that matter, have been hitting their fresh highs. Okay, Senthil likes Maruti over Tata Motors, and our next query is coming from Vineet Kumar Soni, who writes to us on Facebook. He's got 10 shares of HEG, bought at 2,800 rupees. He's got 6-month view. He wants to know if you should hold or sell. Well, the current price, let's just check what the current price of HEG is. Okay, it's above Mr. Soni's buy price, 2,850, 6-month horizon. Vikas, what would you suggest? I'm sure the long-term charts of this one look definitely good, but if somebody is bought around levels of 2,800, what should be the target on the upside?
So if you look at Vineet, the stock has seen a consistent outperformer in the last calendar year 2017-18. The stock has seen a good amount of up move from the lower end of the range of around 340, 350 to make a high of around 3,200. And we have seen good amount of consolidation in this 2650 to 2850 band. So we believe the stock has seen good amount of sideways move. On the downside, the stock has multiple support in the region of 2650 to 2750 levels. So one should ride this momentum on the upside and exit the stock near to anything between 3000 to 3030, which is a short minor resistance. And if that is being crossed, then the stock could head higher near to 3200 levels. One should keep a trailing stop of around 2650 from current levels, as the stock has been a major outperformer. The reversal could also happen pretty sharp. So trade with a stop of 2650 for a higher target of 3050 and 3200.
All right, that's the view on HEG, which is an absolute multi-bagger, 940% higher in the last 12 months. Well, let's move on to the next query. Siddharth Badrinath writes in on Facebook. He has 100 shares of Mindtree that he bought at 830 rupees with a long-term view. Siddharth wants to know what he should do with his investment. Now remember, Mindtree over the past few months has done particularly well. If you pull up the year-to-date chart, you will find that Mindtree has gained over 30%, 32% in the past 3 months and 74% in the last 6 months. Senthil, it's one of those stocks that has actually gained with regard to the mid-cap IT space. You've seen a significant run-up. Does the rally have more ground to gain? Because it seems that the viewer has actually come in at the peak of that rally. So around 830 is where he's come. Is there more ground to gain?
I think it is going to be a moderate kind of returns coming from next 2 to 3 years. First, because if Q3 numbers were stellar, because of their growth in digital part. And Mindtree has grown higher than the industry. And because of these two major growth parameters, I think the stock has rallied in the last 3 months compared to its peers. But we get a good management commentary, like the spending on the digital part from the travel and consumption kind of sectors is picking up well. So management commentary is good. And second point could be like their two acquisitions. They did two acquisitions like Bluefin and Magnet. I think going forward we have to look at this, how these acquisitions are panning out. So far it has been not much growth from these two companies.
Right.
But since he has a long-term view, I think he can hold on to the stock.
All right.
Hold on to Mindtree is a suggestion coming in, and clearly one of the outperformers in the mid-cap ID space. Last time when Bloomberg Quinn spoke to the management, they sounded pretty optimistic about their future growth prospects as well. Let's move on. We're getting a lot of your live queries on our social media platforms, and this one comes on YouTube. Shivani Dhanuka writes to us, holding 600 shares of Diwan Housing Finance Limited at a price of rupees 540. Well, Shivani wants to know what to do with this one. She's not mentioned her time horizon, but I'll take this query to Vikas. Bought at 540, current price is 533. Let's say if she's a short-term trader or investor, what would you advise? What sort of level should she be monitoring on the upside and downside?
Well, the stock has been a good amount of outperformance. If you look at the housing space, the private housing finance companies have seen a consistent up move, and Diwan Housing has been one of its consistent outperformers. We believe the stock would continue its outrun and retouch the earlier highs of around 630, 640 odd levels. If you look at the whole NBFC space, the stock has been seeing good amount of up move. The stock has multiple support areas in the region of around 520 to 500 and odd levels. And so one minor resistance near to 575, 580. The stock would test higher near to 630, 640 level. So we continue to remain positive on the stock, and we believe one should continue to hold on to the stock from current levels. And if specific, he can also add on for a higher target, for the first target of around 575, 580, and crossover of that would give you to fetch a target of around all-time high near to 640 levels.
All right, that's a view coming in on Diwan Housing. Let's take the next query, this one from Sanjeev Trehan. I'm going to look at it from the wall there. He's bought shares of SBI at 325, and he's asking for a one-year view on SBI. Now, Senthil, it's one of those banks it's taken a beating post the PNB fraud case that came out mid-February. But, you know, a lot of people have also talked about SBI, at least SBI, in the public sector space, being a possible buy. Do you ascribe to that view, or do you say, you know, something else entirely?
The NTO PSB Plus, we like the large banks like SBI. And SBI is not just a bank, they have a lot of subsidiaries like life insurance, general insurance and the MC. So with these all kind of subsidiaries and businesses, it's not just a core banking company. So it's like a whole company. And currently, I think the price to book value at around 1.5, I think it's quite reasonable. And since he has a 1 year horizon, definitely I think these negative sentiments are mostly focused on the short-term view.
But which vertical of the bank you're bullish on? If it's insurance, somebody can go and buy SBI Life now.
Yes, but we have to look at the valuations.
Right,
so,
for sure.
If you go to life insurance space, I think SBI Life or HDFC Life, they are trading at a EV to trading at around 5 times or 4 times.
I'm going to use your previous logic of Maruti then. It's okay if the valuations are high, but if the prospects are good, still you would choose SBI?
The theme for Maruti is because they are the market leaders.
Right.
They have 50% market share. The competitors are nowhere near. But if you look at the life insurance,
of the Indians bank with public sector banks, and I'm sure SBI features on top of that.
Yes, that's the reason I think looking at SBI makes a reasonable bet compared to the other small public sector banks. And with the life insurance space, there is a lot of competition. We have HDFC, ICICI, SBI, and other private players like Max over there. So competitive scenario is quite heavy in the life insurance space.
But are you not worried about the asset quality issues that have been plaguing all these banks? A lot of people are saying that it's not out of the way yet.
So you're talking about the price to adjusted book value. So automatically all these, what are the NPAs and GNPAs are already factored in the book value. And if you look at the private sector banks, so that's the alternative play on the, if you're not looking at the PSB, it's going to the private sector peers. The kind of valuation that Bandhan Bank or other RBL Bank or demanding is quite high. And even though I accept that there is growth, asset quality is there on the other side, but we have to look at the valuations, because it can be a great company, but it cannot be a great investment. But now we are focusing on PSBs. It has been never been a great franchisee, but valuations appear quite reasonable, and I'm betting only on the large PSBs.
So it's a hold for you on SBI for a year. All right.
Okay, hold on to SBI and let's take our next query that has come on YouTube. Akash Agarwal writes to us and he's saying he's bought 500 shares of IRB Infra at a price of 253 rupees. Remember, the stock was very, very active in yesterday's session. There was a sudden breakout that was seen towards the second half of the session. Some cool off after yesterday's gain. Vikas, Akash wants to know if he should book his profits. The current price is 274 and it's after 3 years of consolidation, I guess. If you look at on the charts, there was some bit of breakout in yesterday's session on back of good volumes as well. Do you think current level should be the right level to book profits, or he should wait for higher levels?
At the current levels of IRB Infra, one should book some profits, as we believe the stock has seen a consistent outperformer in the April series. The stock has seen a good amount of up move from the lower end of the range of around 225 to 30 levels to 280 and seen some amount of consolidation. No doubt the stock has seen huge amount of volume in yesterday's trade of more than 15 lakh shares, but the follow-up buying has not taken place and the stock is seeing some amount of profit booking in today's trade. So we believe one should book some profits that at the current levels and wait for some re-enter to lower levels when the stock slips below 245 to 240.
All right. The next query comes in on, just give me a second. I've got this. Okay, Banish MV has bought 1,000 shares of Lemon Tree Hotels at 62 rupees and he's asking for advice. He hasn't specified what his time horizon is. Senthil, new listing. It had a quite a big up move on the first day of trade. It's cooled off somewhat. What's the view here? Should he hold on?
So valuations appear rich. If you look at the entire hospitality sector, last 1.5 years they have been performing well because their occupancy rate has been going up, and we know that it is a highly operating leverage business. And but next 2 to 3 years, what you are seeing is a lot of capacities coming in, and foreign players like Hilton and other guys are putting up new hotels, and the capacity is going to come in the next 2 to 3 years. But Lemon Tree, it's a niche play. They are I think focusing on the mid-segment kind of hotels, but since the valuations appear rich, I think it's better to sell and book profits at this point of time.
Okay, let's move on to our next query. Saurabh Pathak writes to us on YouTube. He wants to know between Havells and Voltas, which one should he choose rather for a longer term horizon? Senthil, I'll come back to you. Voltas or Havells?
Both are stellar companies. But when you look at the product portfolio, I think Havells has a better play, and currently they have ventured into the AC segment because of their buyout of Flyouts. Voltas is mainly focused on the AC, but they are the market leaders who are there, but there is a heavy competition in the AC space as well. So I could prefer Havells, but valuations appear quite rich now. We can buy it on declines.
All right, the next query that's coming in is on HDFC Life, and I'm going to toss it to Vikas because it's a short-term query. This one, in fact, is coming in from Akash Kumar. Akash has 500 shares that he's bought of HDFC Life at 430 with a short-term view. He's made some money. The stock is currently trading at around 500 at the moment. It's up in trade today by just about 0.1%. Vikas, with the short-term view, where is HDFC Life headed?
So if you look at the stock, since the listing, the stock has seen a continuous strong amount of up move, and we believe the day before yesterday the stock hit new 52-week high ahead of the numbers. We continue to remain positive, and the stock has been a good amount of strong volume participation over the past few days. So the stock would continue to scale new highs with the strong uptick in the last few sessions what we have observed in the stock before the head of the numbers. So one should continue to hold on to the stock and ride the wave upward momentum. If he wants to prefer and to keep a stop, he can keep a stop near to the previous high, near to around 465, 470 levels where it has multiple support. So then continue for a higher target of around 535 to 540, which should be the first potential target of the current whole leg juncture.
Okay, 540 should be your first target on HDFC Life is what Vikas is suggesting. Technically, in the last 1 month, 16% gain seen for that counter. Well, next query on YouTube is from Sunil Chahal. He is holding 50 shares of Motilal Oswal at 1050. He wants to add more. He's asking, please suggest level to enter. Senthil, it's come off nearly 500 or 550 rupees from the highs that we've seen for Motilal Oswal. Some retail investors would think that maybe with this correction, this is an attractive level to buy more. Somebody who's already bought at 1050, which is the current market price, would you suggest them to add more?
I think it's a good time to add and accumulate, because if you look at the entire financialization of savings theme, I think mostly as well fits in right there. And even IIFL Holdings or Edelweiss, all these companies are moving from a fee-based kind of business to a capital in lending side of book. And I think Motilal Oswal, they're being a market leaders in the equity segment and focusing exclusively on the equity. I think there is tremendous growth in the next, if you look at the long-term horizon, like I'm talking about 3 to 5 years kind of horizon, I think you can considerably add and accumulate now.
Okay.
All right, Aditya Borde is asking about Suzlon Energy. Now, we've got a few queries on this particular stock. He's asking for a long-term view, Senthil. Would you advise getting into this counter with a long-term view? It's been very volatile.
Yes, and especially last 1 year it has been very painful for the entire wind energy sector, because the market moved from your like a tendering basis to auction mode. Because of that, we have seen auction, the orders drying up for Suzlon or Inox Wind. And it's not a long-term play because the industry is pretty much cyclical.
Yes.
I think if you want to play in the renewable side, I think most of the companies are either debt-laden or not performing well. And these kind of companies cannot be taken for a long-term bet.
Okay, so then would you suggest an alternative to Aditya?
So one could be the Shanvi movers. It's an indirect play on the capex. Like if it's a short-term play, because if at all the wind energy segment corners up the orders, I think they are in the crane lending space. So once these guys get the orders, I think obviously there is going to be a substantial increase in orders for Shanvi movers also. And they are not only present in the wind energy sector, they are also present in the other parts of like infrastructure providers. So I think it could be an indirect play. You can look at the stock.
Sure.
Okay, let's move on. Abhishek Rai writes to us on YouTube and he wants to know about BPCL. He's bought 500 shares of the company at a price of 300 rupees. He wants to know, should he hold or sell? Remember, the oil marketing companies have been pressured for the last 2 trading sessions today as well. It's seen cuts of 3%, but still, I guess Abhishek's buy price was at lower levels of about 300 rupees. Because I'll come to you. Considering last 2 days have not been great for the entire pack, oil marketing companies, but for BPCL specifically, somebody's bought at 300. Should they look at placing a stop loss now or should just book profits?
Well, the stock has seen a good amount of correction in the past few days from the highs of around 455 to 460 levels. But we believe the stock has multiple support area in the region of around 395 to 400. If you look plot on the monthly charts, it has multiple support area near to 21-month and 34-month average. So one should continue to hold on the stock and wait for some bounce to exit near to anything between 465 to 470, because that would be a good entry exit point at the levels. No doubt the last 2 day weakness has been on the better of spike in the crude oil prices. So once the international crude oil prices starts cooling off, it would see again some amount of dead cat bounce in the stock, and being one of the large prominent names in the oil and gas space, one should continue to hold on to the stock as it has been trading at a very long term support area and wait for some higher exit levels near to 455 to 460.
All right, that's the view on BPCL. Big correction there in the oil marketing companies. Let's take the next question. This one from Prasad Rao. He's bought 100 shares of Edelweiss at 250 with a 2-year view, and he's asking what his target should be. Let's look at the stock and see what it's trading. Remember, Prasad bought at 250. He's in the money, just about. It's currently trading at 267, and it's down in trade today, about 0.6%. What's your view on this counter, Senthil, and what would the target for 2 years be?
So, 2-year target is pretty much
but one,
tough.
okay, where do you see it going in a year's time?
But I think Edelweiss as a franchise has been doing good. Like if you look at the decade back, they were a fee-focused play, but now they have ventured into lending part, and the NBFC business also doing good.
Yes.
And currently, the insurance business is not doing good because insurance business takes a lot of time to come to profits. If you exclude the insurance business and look at the ROE of the company, it's around upwards of 20%. And they are much focused on the SME lending side. They are looking to increase the retail portion of their NBFC book. And considering the solid franchisee and the kind of growth we are seeing in the financialization of savings theme, I think Edelweiss would be a much better play in the since he has a long-term view. So he can hold the stocks right now, and if any decline comes, he can buy at those levels.
Edelweiss or Motilal?
Actually, both are stellar plays, and if you have a long-term view, you can buy both these companies.
Okay.
You're putting Senthil on the spot there.
Sorry for that, Senthil. I did it for the second time. Okay, I'm going to take the last query for today. Mitesh on Facebook has bought 2,500 shares of JP Associates at a price of 21 with a long-term view. He's asking what to do. Senthil, I'll come to you. I think recently a lot of big investors or marquee investors are checking in, and the reason we know that the company has been trying to pay off its debt. But having said all of that, do you think JP Associate from a longer-term perspective can be a multi-bagger?
Definitely not, because if you look at the subsidiaries, the power and infra subsidiaries are not doing well. They are in the insolvency stages. But excluding these power and infra, I think they have a solid assets. It can be a short-term play and a very risky play, but not a long-term bet, because we have a lot of other plays in the infrastructure. We can look at the operational parameters and say, but long-term view, I think this is not the company to look at.
Okay, so Senthil says it's an avoid for JP Associates, according to him. You can look at a couple of the other infrastructure companies. Well, on that note, I would like to thank both our guests. Thank you very much, Senthil, as well as Vikas, for joining us today and helping our viewers with their queries. Well, that's all that we have on this edition of Ask BQ.
Well, all of you who've joined, I can see a few names. Amol, Saurabh, Sunil, thanks so much for joining in. We'll try and take your queries tomorrow. Do remember, we're just a tweet, post or call away. Keep your queries coming in and we try and address them on the show. But for the ones that we've discussed today, you can log on to the website bloombergquint.com and search for the hashtag AskBQ and get all the answers to the queries that were discussed today. Power Lunch is up next, so do keep watching. This is Bloomberg Quint.
Sir, please